What up, good people? We are back for another episode of the IMC Recap. We got a power pack amount of information we're going to go over today. So we're just going to jump it off. So one thing I want to make sure that we highlight is this young lady here. Last name, I believe, Kennedy. She's at Texas Tech University. Let's check out this quick video, and then we're going to get into what we're going to talk about. Excited about all the feedback we've been able to receive thus far. We've been moving and grooving. We got a lot to share, a lot of great things that is on the horizon for the future of the company. So we are rocking and rolling. Najee Kennedy. So if you have not heard about her, you're about to. So first of all, just solid. Let's watch this real quick.
2-2. Change up, throws her.
Yeah. Energy. Najee Kennedy, solid. Like just all the different videos I've been able to see, the interviews that she's been able to just share just more of what her personality is like. And so one thing I want to point out is that she's actually the first athlete in school history to sign a 7-figure deal at Texas Tech University. So her initial deal was at $1,050,024. So $1 million was a direct payment. 50,000 was for living expenses. And uniquely enough, if you're like, yo, where did $24 come in at? $24 was to honor her jersey number. Well, I guess my jersey number 30 million. You know what I'm saying? So Texas Tech cut me a check. And so really excited about just what NIL is able to do for these athletes. Alongside that, she's been able to not only perform on the field, but also it's been able to manifest into other opportunities. So most recently, she's been, I would say, added as one of the ambassadors with Venmo. And so she signed a pretty significant deal with Venmo. And it points out a few things here. One, there's 2 other athletes that's been able to move forward with this in regards of just the name, image, and likeness. We all know Venmo is one of those payment processing platforms like Cash App, and they have been able to integrate themselves within this NIL space, helping colleges and universities process payments. One of the things probably unspoken about when it pertains to athletic departments, colleges, and universities is how unprepared they have been to be able to facilitate these types of payments, infrastructure, accounting. Like that aspect of athletic departments has really not necessarily been a thing. It's really been an oversight of the players, personnel management, operations, but not necessarily from an accounting standpoint, just facilitating payments. And so Venmo has been able to step in and help support these different colleges and universities. And throughout that, they've established ambassadors. And so shout out to Najee Kennedy, and if I'm messing it up, my bad, Miss Lady, for getting another 7-figure deal. So she's getting another $1 million payment to essentially display the easy use of Venmo and why other athletes and probably to help promote Venmo to other colleges and universities by utilizing her brand. And so definitely want to shout her out. Shout out to the Red Raider Nation. We have a little bit of affiliation there just with our Financial Freedom Project. So definitely wanted to shout that out. Now, as we stay in this NIL space, there is someone else that I want to highlight. I thought that this was a bit unique, and to be honest, I was unaware of it even existing. So there is this platform called Unrivaled. So if you're familiar with it, let us know, drop in the chat or send us a message. So it is the 3-on-3 league, and it was established by former WNBA players, and I think there was a few on there as well. But this particular league, and I got a strong feeling that they were influenced by the Big Three that was established by Ice Cube. But with this particular league, this athlete that I'm going to highlight, she is going to make more in her first year with this league than she would in regards of all 4 years of her compensation within the WNBA. So we know that compensation has definitely been an issue. Just some of the income inequality when it pertains to women's sports and men's sports. And then you learn more about like the business infrastructure on what funds each sport and how all of that breaks out and shakes out. And there's definitely a huge, we'll just say, slope of opportunity for the future. Because when you look at some of the venture capitalists that are out there now, you are seeing a slant towards, we'll just say, women's sports. One investor, particularly, I was just listening to an interview, Melody Hobson. She was talking about that's where she's shifting. I won't say shifting, but continuing to focus in regards of some of the opportunities. So this athlete that I am referencing, nickname Buckets, first name Paige. So I ain't gonna lie, y'all. I low key, I feel like I'm struggling with her last name. Is it I ain't gonna try. Anyways, Buckets, aka also known as Paige. So she signed a 3-year deal with the Women's 3-on-3 League, as you can see here, in April, and also became an investor. So as we could see, there is more of these type of structures to where athletes are not only being compensated from an income perspective, but they're also being able to play ball when it pertains to equity. And so shout out to Paige for being able to structure this particular way. As mentioned, her first year salary in this Unrivaled League, which is a 10-week season, is expected to exceed what she would make over 4 years of her WNBA rookie contract. And so her WNBA rookie contract is slated to earn $78,831. And again, that's per season. Here's some of the stats. If you've been keeping up with women's sports, especially collegiate sports, dimes, she dropping buckets. That's why she got the nickname. But again, this gives two things in regards of just additional information. One, the average salaries in regards of this particular league was on average $222,000 last season, which is nice. I'll play in that. Alongside that, the players were able to get equity as well. And so this hybrid salary plus equity type of model, that is something that is becoming more of a thing. We got a few more other articles we're going to talk about that mentions this as a structure. The Unrivaled, so this is essentially the parent company. As of right now, they're valued at a $340 million valuation. And so this is, of course, eliciting interest from other investors and individuals that would like to see this manifest itself into something greater and larger. And then this does create an aspect of competition when it pertains to the WNBA. And so some of these traditional leagues are going to have to adapt and adjust the way in which they are distributing their resources or even sharing expenses. And that is something athletic departments are navigating now because of this NIL rules that now we have, I won't say now, but we've been sharing expenses with sports in which the revenue have only come through 2 or 3 sports, if that max. So very, very unique positioning, but also, seeing more of the conversation and concern and frustration around women's compensation, especially within the WNBA. And then I was unaware of this league, so shout out to the founders of this league. But for them to establish this 3-on-3 type of competition, but also to accelerate this type of compensation, I believe this allows us to be able to harness talent, which again helps, the consumers like us. We're able to be entertained with, some folks out there making some big plays. And so really, really, really excited about this in regards of just the future of sports contracts. And then shout out to Paige Buckets. I think is I ain't even gonna try to say your last name, my bad. But you are really displaying how athletes essentially not only have voices on the court, but also off the court. So shout out to Paige. All right. As we stay in this space, another article I wanted to highlight, and there's a few more that we're going to get through before we finish up. But another article I wanted to highlight was actually, very similar in this space. When you think about compensation, when you think about equity, but also when you think about structure. And so, with these athletes changing the game, one of our previous podcasts was talking about how Shedeur was able to negotiate his contract with the Browns on his compensation, being able to get a percentage of the merchandise, which has definitely yielded well for him. This new era of how we establish contracts is starting to really reflect themselves in a few different ways and areas. And one of the assets of blockchain technology and cryptography and cryptocurrency and this digital evolution that is happening real time is that there was an article that I recently read that I want to point out really quick that talks about how these types of structures will essentially yield a different type of we'll just say approach when it pertains to contracts. And so imagine a brand agrees to pay an athlete about $50,000, and once they post 3 branded videos on, it could be on Instagram, X, Snapchat, whatever it may be, with blockchain, that can be coded into a smart contract. So once you do 1, 2, and 3, we develop this chain that has a block that has these rules that once you execute this, you will now be verified, right? You've done these steps. It is now verified. The payment is released automatically, right? So there's no delays and no middlemen. And so that's really the biggest challenge that's happening within digital assets, cryptocurrency, blockchain technology is, can we be more efficient, right? Can we be more efficient? And then there's this other term that says, if we could be more efficient with how we codify this asset, how we recognize this asset, how we release the resources tied to this asset, now we can start diversifying the utility of this asset. And so you're seeing these terms like tokenization. So tokenization, that, you know, I would say different terms in different spaces, but tokenization ultimately, when it pertains to these type of contracts, are starting to shift to where the future earnings are going to be turned into like stocks, like shares of a stock, but we're just going to use tokens because that is the most compliant term, right? Like, and so assume, you know, an athlete is going to be an excellent, I'm not a big fan of this because I don't like forecasting something that's tied to physical ability, because if you get injured and all of that, you know, that's tough. Make sure you get your insurance. Lawyers in London, not a plug. They need to cut me a check because we done sent y'all some clients. But with that being said, imagine someone being able to tokenize the future earnings. And so that someone is able to pay into a share of what they are now. And then if they earn more, right, that earnings grow 100%, 200%, 300%, that share, that token gives you the ability to appreciate with it. Also, it has like a design like an NFT to where it gives you, you know, unique access. You could, you know, meet them by, after the game behind the stadium at a particular location. So it does bring and yield this type of different type of utility. And we've seen it. Like even I mentioned the big 3 earlier. The big 3, shout out to Ice Cube. He was definitely early when it pertained to how to use NFTs the right way. Unfortunately, when there's anything new, there's going to be a good bit of misuse of it. And we've seen that when it pertains to cryptocurrency, digital assets, NFTs. But the blockchain technology is something that folks, you just can't argue with. But we do see this providing a benefit for fans. We see it providing a benefit for corporations, for sponsorships. And it really just gives the community a voice into what they would like to see in the future. And it gives them the ability to invest into what they see in the future if their value is going to, you know, move in that direction. So sponsorships, transparency, right? Like everything will shift with this type of introduction of tokenizing, right, these different athletes and these different contracts and these different opportunities. And so now there's a number of risks and challenges tied to it. Of course, regulation is yet to be able to wrap its arms around what that looks like. Token prices, you know, due to the lack of regulations, due to the lack of infrastructure, there may be a swing in pricing, right? And so volatility is definitely going to play a role. And then that just the state by state, because you can have federal regulation, but you're going to need state by state regulation. So we're super early in the implementation of something like this. But at the same time, it is something that we do see playing a role. The Robinhood CEO was recently interviewed, and he was talking about tokenizing stocks on the stock market, because stock market operates between a confined amount of time. It's closed on the weekends, closed on holidays. The one thing about cryptocurrency, digital assets, and if you are able to tokenize these equities, it gives you the ability to essentially trade 24/7, regardless of what's going on. That definitely opens up different markets across the globe to be able to play ball within, our economy and our ecosystem. And so really, really interested to see how that continues to evolve and shift. All right, let's keep going, good people. So another article I wanted to highlight, and we may have seen aspects of this really in different capacities. And I'll actually start here. So Morgan Stanley, and speaking of crypto, Morgan Stanley is they're getting on fold now, right? And so there's a lot of larger companies that were not the biggest fan of crypto, and a lot of it was just due to the lack of clarity around regulation. Like we don't know how this is going to roll. So Morgan Stanley is joining the crypto and stablecoin infrastructure firm Zero Hash to enable customers of the Wall Street giants E-Trade online brokerage platform to trade Bitcoin, Ethereum, and Solana. And they confirmed in a statement, this was on Tuesday, this was September 23rd, so earlier this week. So New York-based Morgan Stanley may expand to other digital assets. And so there may be other cryptocurrencies that it could offer in the wallet. But as of right now, it is focused on the top 3. And as you can see here, the underlying technology has been proven. And blockchain-based infrastructure is obviously here to stay. Now, folks are arguing with it for the longest now. Like, no, it's here to stay. It is here to stay. So this gives, another affirmation of institutional adoption, right? Just to be able to see how things are adopting, are being adopted at larger levels. And so this evolution, as we've mentioned before, this is pretty much the gold rush of our century. And so there's going to be a lot more opportunities. As you can see here, now I wasn't too familiar with the firm Zero Hash, but let's check them out. Let's see who they are, what they represent. So Zero Hash, let's see here. So Zero Hash here. See what we know about these folks. All right, I'm pretty sure there isn't any affiliate. Well, we see why they're using Zero Hash. Crypto startup Zero Hash raises $104 million from who? Morgan Stanley, SoFi, Apollo, and others. Now, this ain't nothing wrong. There's nothing wrong with this, but it is good to just see why they use that platform, because there are other platforms they could have partnered with to be able to facilitate these types of transactions. Of course, compliance regulations play a role, but one thing we like to do, we like to follow the money. And so this startup, they raised now that's interesting. So they announced the platform, we'll just say coming together to be able to do the crypto, to purchase crypto, trade or whatever crypto, the same day that they announced that they are one of the investors in the company. So I'm pretty sure that was tied to some level of compliance. But as you can see here, this firm and other firms were able to probably skyrocket some of their operations and opportunities due to the fact that Trump passed the policy that made it a little bit more friendly and favorable for regulation around cryptocurrencies during his leadership. And so we see a good bit of this happening. Looks like the company is valued at about $1 billion. So I won't be surprised if there's other companies like Morgan Stanley. I almost called him Edward Jones, like Morgan Stanley, that is going to establish a digital asset arm, but they may have a vested interest in how that arm operates. And so good to see that there's more adoption. Good to see that there's more opportunity. As you know, we like to say this all the time: educate before you allocate to anything that can grow in the future. It's digital assets. If it's equities, if you're about to buy some furniture, you think that's going to be worth some more later. Like, make sure you know what you're talking about. Make sure you do your research. And so excited, super excited about seeing that manifest. All right, a few more things before we wrap on up. One of the things that has been interesting as we've been highlighting, talking about, seeing, and we've seen this just, in conversations with colleagues, friends, just artificial intelligence, ChatGPT. ChatGPT probably, I don't know how many times that term has been used over the last 3 years, but it's probably increased by like 20 million%, right? Like that's something that's become more of a common conversation on how artificial intelligence can interrupt, integrate, or implement a process that no longer requires a human. And so with that being said, there has been a good amount of compensation thrown out there for those that are in the space. And so as you can see here, Meta, so you see Money Mark Zuckerberg, but I'm finna call him Money Matt to the left. So we know about Mark. Let me tell you about Money Matt. So Matt, I don't know how to say your last name, big dog, so I ain't gonna try. 24-year-old AI researcher, just became one of the most valuable recruits in tech history. So he left his PhD in computer science at the University of Washington after making waves in AI research. His work on Momo, a multimodal AI model, won an outstanding paper award at NeurIPS in 2022. He co-founded Vercep, building an autonomous AI agents that raised $16.5 from investors, including former Google CEO Eric Schmidt. That work caught the attention of Meta. The company initially offered him $125 million to join his AI superintelligence team. He turned it down, like, nah, I'm good. Mark then met with him personally, returning with a $250 million package of stock and cash, with $100 million paid in the first year. So ultimately, it ended up being a 4-year deal. And I thought that this was incredible. And why is that incredible? One, because we see, a lot of athletes or individuals that want to become athletes because they see the amount of money you can make. Like, oh, I can make a lot of money. This is the only way I can make this type of money. These NFL, NBA superstars, their contracts are in the range of $200 million. That is celebrated, and rightfully so. But as you can see, good old Matt here, AI researcher, he was offered $250 million. So we do got to keep it real. These deals are rare. Just like a small fraction of athletes don't make those type of like compensation deals. There's only so many Patrick Mahomes. There's only so many Michael Vicks. I'm gonna shout out Mike Vick. There's only so many folks that were able to break the mold in regards of the 7-8 figure type compensation, even 9-figure type of compensation. But it definitely shows that elite compensation is not only for the playing field. So you can be an athlete from the neck up. And again, this is the gold rush of our centuries, of our generation. But within that, there are opportunities to be able to skyrocket one's compensation, skyrocket one's value. You just have to be valuable to the problem that you are looking to solve. And so thought this was very, very incredible in regards of just the type of compensation that is out there within this space, but also to let the young people know that, hey, opportunity is there. It's out there. You just have to apply yourself. So we wanted to bring you a mix of information today. As we're able to see, shout out to the young lady at Texas Tech. Incredible deal with Venmo, another 7 figures, and I'm pretty sure there's more on the horizon. You're an incredible athlete as well. Shout out Paige on not only getting the compensation, but also the equity. Shout out my guy, Money Matt, with Meta, being able to join them, getting that $250 million contract. But also shout out to all the athletes now that are in this NIL space. Make sure that you are continuing to educate yourself, because you are breaking the mold on these types of compensation, contracts, negotiation, business models. Put a team around you. You're pretty much the CEO of your future. It's just starting much sooner. You don't have to make it to the NFL. Don't have to make it to the NBA. Don't have to make it to the Major League Baseball team, Major League Baseball. Like all those aspirations are still real in which you're able to get paid, but now you're getting paid earlier. So shout out to all of our listeners. Make sure you subscribe. We got so much more coming. Hey, it's on, y'all. Stay planning.
Easy to forget all the noble words you said when you get down to the bottom.